We are looking at a Australian US dollar cross 60-minute chart, and what we're looking at now is I'm just going to compress this for you so you can see where we're at. We have had this uptrend from about 74.50. We have this uptrend, and it is somewhat of a laborious uptrend. Price has started to trade above this key high right here, which is bullish. However, we've seen a rally on this day, and then we've seen a second attempt to move through 76.40 over here. And what we've done here is price is consolidated in this somewhat of a downward wedge pattern. We have identified this base of support at this high, but we pull our Fibonacci's from this low to this high, and price is currently being supported by a kind of a combination between this high and the Fibonacci level, which is a difference of about 7 and 15, about 7 or 8 pips. With 7 or 8 pip difference in here, and we have this down wedge, and we're looking for this 38% level to hold. Otherwise, if it does not hold, then we could see a significant down move, and I'll show you how that's important to us in a moment. Here's our short-term uptrend line, and what I'm going to do is I'm going to expand this out so we can see it a little closer. Price comes down, and you see how price pulls down below these lows. Of course, that's bearish. It comes down and tests the 38% retracement level. You can even trade long at that 38% retracement level. You could trade long here if possible, but the longs need price to move above this 76.15 level right here. Now, price comes down during the Asian session, and it responds by moving up here. So if you traded this long down here, 76.04 plus spread, and the high was 37. So there's 33 pips to make something of so far if you had traded it long, because this trend could continue going up. Price spikes up to as high as 76.52, but what does price not do? Price does not hold above 76.40, and it really needs to hold above 76.40 for the trend to continue. Now what we'll do is we'll trail it with our short-term trend line here. If price does not hold above 76.40, that is a short. And this is for 1 hour so far. I don't know the exact amount of time that it was above 76.40, but it looks to me like it was quickly rejected when London opened. This was 6 Central European time. So it's 8 a.m. Central European time when Central Europe started trading. Price rallied and has been rejected. That is very favorable for a down move here. Now there's two ways we can define our down move. We're looking for you can trade it here in anticipation of a down move as a result of the false break, or you can wait for the break of the short-term trend line, or you can wait for the break of the 38% retracement level, which is a key level. You see how price comes down here, and it is holding at support for the time being, breaks through the trend line, comes up, tests the backside. This is a very bearish candlestick formation right here, and now we start to move below the 38% retracement level. It wicks out at this trend line here, which is bullish, and now continues to move down and hold below the trend line, and that of course is very, very bearish for our trade. We're going to have these swings, these interim short-term swings while we're in our trades, and that's the natural course of the movements in FX. Now price is coming down. This is our 62% retracement level, comes right through, and here's our 79% retracement level. And look at the move that results from this reversal pattern. From the false breakout reversal pattern, look at the nice move. This is why when this thing stops trading above 76.40, you can sell it here with a stop above the high, take first profit at 20 pips before we have to start breaking some of these key levels and have to start chopping wood to move down even further. And a price comes down to levels of support. It really had no regard for any of our other key levels. Comes right down to support and bounces.